The timing of any decision by the Federal Reserve to raise interest rates has been thrown into even more confusion by the employment data for September, which was already confused by the Chinese stock market and data in August. So let's sort through the issues. First of all, the zero interest rate policy was put in place in December 2008 as an emergency policy to deal with the financial panic. The U.S. economy has been growing at a pretty steady rate of just over 2% since 2010. So we have many years of steady, modest, but steady growth, and clearly the emergency is gone. So why not get rid of the emergency policy? Well, that's what the hawks would say. Also, if you look at the unemployment rate, it's at 5.1%, peaking at 10 down to 5. So we've had dramatic improvement in the unemployment rate over the last 5 years. Also, the unemployment rate over the last 55 years has averaged 6.1%, and we're at 5.1. So we're well below the 55-year average. Again, the hawks would say time to raise rates. So why haven't the Fed raised rates? Well, here's the case for the doves. They're looking at inflation. General inflation is only 0.3% above a year ago. That includes food and energy. And really, energy is why that's so low. Remember, energy prices fell dramatically in the fourth quarter of 2014. Gasoline and other related refined product fell sharply in the winter of 2014-2015. And so until those sharp falls are out of the price index, you really don't see inflation rising. So the Fed calculates this as year over year. So when we're looking at first quarter 2016 and comparing it to first quarter 2015, we're going to start seeing general inflation as reported start to rise. Core inflation, which doesn't include food and energy, is already at 1.8%, which is essentially rounds to the 2% of the Fed target. But the Fed wants to wait and see for sure that energy prices and the general inflation rate are going to be heading back toward their 2% target. So Fed fund futures are now setting the probability of a Fed rate rise in 2015 at significantly less than half. You don't get to the coin flip until March, April of 2016.